Everybody, good morning. How's it going? We've got channel members Gaten, Dawn, Dan, Rob, Barbara, Diane, Lieutenant Colonel Goose, Donald, Serge, Terry, Scott, Craig, Sinborn, Darren, Will, Ted, Mary, B. Good to see everybody. And regular subscribers like Alejandro, Larry, Mark, and Jason, and Alan, and Rongamer's here. Welcome, everybody. Remember, if anything I say is helpful, beneficial along the way, interact with the video, give me some chats, comment, like, subscribe, all those things. All those things are appreciated. Share this with a friend, maybe the most appreciated. If you got somebody else that might benefit from anything I say. So, yeah, welcome back for another day. It's Friday. And, show me where the money is, or you can follow the herd like everybody else, I guess. So, for months now, we've been hearing the same old song and dance from the talking heads on Wall Street about the consumer being strong. Everything's good, everything's dandy. Except Jerome Powell kind of changed his tune just a little bit this week. And, well, stock market record highs. Resilient economy. Everything's beautiful, right? Fairy tale for the modern age. Happy endings, unicorns, everything's great. But what if I told you while everybody was busy popping champagne corks and patting themselves on the back this week, canary in the coal mine just dropped dead. Flat dead. And it wasn't a quiet, peaceful death. No, this is messy, ugly, and a very public spectacle that has some of Wall Street's biggest names scrambling to cover themselves for what just happened. Talking about a company called Tricolor Holdings. Probably never, ever heard of them. And that's the point. They're what we call a subprime auto lender, which in Wall Street speak means we give car loans to people who probably shouldn't be driving a car more expensive than a Walmart bike. Their specialty? High interest loans to undocumented workers across the Southwest. A noble cause, right? Like, great, I'm sure. Or at least it was a profitable one until very suddenly this week it wasn't. Because last week, Tricolor, with its near $2 billion in debt, didn't just file for bankruptcy like a normal civilized company. Nope. They went full on, lights out, everything's got to go, liquidation. And the juiciest part of this, federal investigators are now sniffing around for fraud. We're talking about allegations of the same car being used as collateral for multiple loans. Kind of like a magic trick. But instead of pulling a rabbit out of the hat, they pulled a whole lot of debt out of thin air. And the audience for this magic show, well, it's the who's who of Wall Street. We've got JP Morgan with exposure to this. We've got BlackRock with exposure to this. We've got Fifth Third Bank with exposure to this. They're all holding the bag, wondering how they got duped by what amounts to a very sophisticated used car salesman scheme. Fifth Third Bank already admitted to a potential $200 million loss exposure to this. That's a lot of money for a bank. Now, before you start having flashbacks to 2008 and the great financial crisis and begin hoarding canned goods or ammunition or, getting out your Occupy Wall Street shirts, this isn't the Big Short 2.0. The auto loan market at $1.7 trillion is a kiddie pool size pool of debt compared to the $13 trillion ocean of mortgage debt that nearly drowned us all in the great financial crisis. Unlike houses, everybody knows cars are depreciating assets. You drive it off the lot, poof, That's 10% off the value right there. Faster than your New Year's resolution blows up. Anyway, so the lenders, in their infinite wisdom, actually expect defaults. In fact, they kind of plan on it. They've got GPS trackers, remote kill switches. Miss a payment, and your brand new used Honda becomes a very expensive lawn ornament. It's a business model built on failure and a business that has been absolutely booming until it wasn't. But here's where Tricolor becomes more than just another corporate casualty. This isn't just a story about one shady lender cooking the books. This is a story about the strong consumer. It's been propping up the entire market rally because while the wealthy are getting wealthier, they're buying their third homes, maybe fourth Teslas, other expensive junk, maybe. We're seeing that the ripples show up. It's kind of interesting. Buy now, pay later is actually 70% used by people that make more than $150,000 a year. What happens when those top-end consumers stop buying stuff? This is actually leveraging the top-end consumer and their purchasing power. This hiccup could ripple through. Remember all those young people who bought cars during the pandemic when they didn't have money to make they didn't have to make student loan payments anymore, right? Well, surprise, student loan payments are back, and with interest. If you quit paying years ago, now you got to pay all that interest too. Those people are juggling car payments that are higher than rent. With a student loan bill that could choke a rhinoceros, it's a financial perfect storm. The first cracks with this Tricolor bankruptcy are starting to show. Just one sector of the bigger debt market. So what's the play here? What's the plan here? How do we, the savvy investors who actually pay attention to these sort of things, make money off this slow motion train wreck? Well, you can play both sides of the coin here. They're both pretty shiny. On one hand, you've got short opportunities. Companies like Credit Acceptance Corporation, they're the poster child for subprime auto lending. If Tricolor is the first domino to fall, guess who's standing right behind it? Then there's these banks, big banks that are holding subprime paper, waiting to write it off when the defaults start piling up like autumn leaves. But shorting America might not be your style. There's another way to play this. You can be the vulture, pick up the pieces, eat the carcass. Think about it. What happens when all these people default on their car loans? Repossessions, right? The cars get repossessed. Who does that repossessing? Not the banks. They hire specialized companies to do the dirty work. Repo companies potentially about to get real busy. Then all those repossessed cars, got to go take them to auction somewhere. Used car auction houses might see a flood of inventory. Probably going to be a fire sale. Everything's got to go. Got to get some cash out of it. And let's not forget, collection agencies. They buy a bad debt, pennies on the dollar, then try to squeeze blood from stones. It's not pretty work, but it can be very profitable if you get in the right stuff. So, while mainstream media, mainstream financial media specifically, continues singing lullabies about consumer strength and economic resilience, we're over here looking at the cracks in the foundation. We're watching the canaries drop dead in the coal mine, and we're positioning ourselves accordingly if you want to play this potential train wreck. Because this market isn't about being right or wrong. It's being prepared. It's got a motto. And right now, the smart money preparing for a world where the wheels literally come off of that strong consumer narrative. Well, that's my monologue for the day, everybody. Do your own research. Connect the dots between the story. Sometimes it's more profitable to zig when everybody else is zagging. Be careful out there. Be careful out there. That's what I always say. Permacautious. Permacautious. Be careful. You know, it doesn't have to get worse, but the signs are this is still going down the cracks. And all trading involves a substantial risk of loss. So if you take a position, you might lose your money just because past performance has worked out this way every time in the past. It doesn't mean the future is going to do that. All right. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. If you want somebody to tell you what buttons to push to make some money, well, hire and consult a financial advisor. Here we are on Friday, OPEX day. Quad OPEX, $5.3 trillion in notional, the third biggest OPEX in history, behind March and June of this year. Things have slowed down just slightly from earlier in the year. Crazy. Crazy, crazy, crazy. Yeah. If we have a flood of auction inventory, it could potentially trickle down into the actual prices for used cars. We'll see. Depends on who's the greediest. Who's the greedy sucker trying to get it all out of there? Anyway, S&P cranking on higher. Look at that. Crazy. Crazy, crazy, crazy. So we pretty much topped this move out. Just throwing this out there. Look at that. We hit the 1272, 1618, 6672 above that. Right there. Things get really crazy up around 6800 right now without a bigger pullback. And bigger pullback could be one of these. And we just had a couple of them not that long ago. Could be one of these. A little bit bigger. So just be careful. We're sitting in the froth. Not much runway left. Overnight, so far, we're just riding the 15 minutes here. That does set us up with a little bit of upside potential today. Click there. Back above the 618. Looks like we're going up to 67.27 on the futures. Futures are running about 55 points above the cash index. 56, 57. So remember, futures roll over, which they did this week. You've got ES1 exclamation point minus the cash index. And you get something that looks like this. If you didn't know you could do math on TradingView, guess what? So every time we get a contract rollover on the futures, right there, right there, right there, right there, we get this right there. It's not always a pop. It can be a drop. That's the difference between contango and backwardation. Usually, you can count on the S&P going higher. It's not always the case. Sometimes back here, we actually go lower on the contract rollover. Right now, we're expecting higher prices, so we pop. It's kind of, futures are a little bit like options, but not quite the same in that they price forward momentum into the market. You see right here, the forward-looking graph. I don't know what you want to call it. It's the forward curve is what they call it on here. S&P pricing in out to 2030, being up in like the $8,000 area right now. So how do you know what the S&P is pricing in? There you go. How do you know what NASDAQ's pricing in? Look at the futures. Looks like we got a little hiccup going a slower rate of climb into 2027 and then an acceleration out into 2030. Russell, almost an exponential looking thing. This is where it gets interesting, though. Look at oil. This went from a constant decline to now we have a spike in here into the 2030s and then a drop off into the 2035s. That's interesting. It used to just be like not that long ago, this was just a curve like this. Now, oil markets are pricing in a pop. Not a big pop, but a pop. Gold. Look at this. Interesting climb rate up to 2028, late 2027, and then an accelerated climb rate into the 2030s. Bitcoin, they don't draw the Bitcoins right there. It's kind of interesting. You can flip through different futures and see what the market expects, right? What's the expectation on diesel fuel? Down into 2026. What's the expectation on gasolina? Look at this. There's the seasonal variation for you. We've got the seasonal variation in the price of gasoline cooked into the futures prices. It's interesting. Interesting. I always think it's fun to look at prices and what, different things that people may not ever point out to you. So, moving on, how do we make money today? Gold, suffering a little bit. Indexes, potentially topping out, but I'm not betting against the train at this point. Potential to go another 150 points higher on the cash index here. We can keep ripping. And if we just copy this big arrow right here, I just copied what we came out of COVID with before we topped out. That could take us up to the 10,000 area. That's just wacko nutso. See, look at this right here. The pullback we had this year was just as big as this pullback. Actually, a little bit bigger. The Liberation Day pullback, bigger than the COVID pullback, just from higher prices. So if we did the same move out of it, see that move right there to the top, that would put us up here, potentially in the 10,000 area sometime by January 2027. Could have a whole nother year of ripping higher. Ridiculous prices. So that's why I say, don't bet against the bull train until the cracks in the foundation are actually broken all the way through. Just be careful. I'm cautious, but the markets can keep doing irrational crap until we're all broke. And then finally actually turn down. That was a wicked candle yesterday. Nice breakout right to the 1618. And what did we do? We back tested all the way down today. Classic price action. This right here sets the stage. Going on up. Getting close to 47,000. Dollar. Coming up to the trend line. Poke through. Coming up to 100. Be a pie in the face of that weak dollar narrative. Apple dumpling. What's crack-a-lackin'? Coming up into the A equals C potential. Long line. I saw some posts this morning about the long lines in Shanghai for the iPhone 17. Big long lines. That's A equals C right there, 245. Be careful. We reject that area right there, that little bitty red zone. This could come all the way back down. Doesn't have to, but that's the potential. You're looking at that kind of upside versus that kind of potential downside. That's a little bit up versus a lot of it down. I don't like that kind of risk reward. Now you can be like, bah, I ain't scared. Going higher. Yeah, just be careful. Amazon keeps struggling to fill that gap. Gap down over here back in February. Had nothing to do with Liberation Day yet. And still struggling here. Still struggling to beat that zone. We beat it upside 257, 271, but still downside risk until we get through that. Google still trucking 263 upside target. Meta, yeah, still trucking 840 upside target, 839. Microsoft still working on this correction here. Remember, this one corrected back here in ABC while everybody else was going higher into the end of the year here. And now this one's doing a bigger correction. It's one of the two biggest companies in the world. And potentially working on a correction here. NVIDIA trying to shake off the Chinese government's ban on Chinese companies buying GPUs. First move down. And that's a first move down, retrace, first move down, retrace. What's the next news event? Can push us lower low. Come back, back test. Be careful. Just warning about the pattern. This is a pattern for a swift drop back down in this 150 area. If we can get down in there, 150, maybe 140, that sets it up for the bigger pop. 212, possibly even 220 on the next move higher. So I'm not super bearish, just cautious. Like if we do that, it sets up this. Right there. Salah grinding right here. Taking a little rest as we got into that high right here. Supply zone. People bought right there. They wanted to get out. Book the profits. We'll probably have another one of those right up here. We might just blast it and hit the 500 level right there. So there should be a little bit of supply right up here into 450, 460, maybe a little bit more supply up there around 480, 490. 500 still my target. And if things get extra crispy spicy, could see 800 on this move. It's the 1618 up there. You know, 550 resistance, 600 resistance, may churn in here, boom, 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 up to 800. Then we may take a bigger pullback back near where we are before we go even higher. Netflix. Still working on this potential. 1, 2, 3, 4, 5. Still working on that potential. First move down, retrace. Right there. All right, so I go pull all the gainers. Things moving $2 or more up in the pre-market. Put them on the gainers list. Things moving down $2 or more. Put them on the decliners list. The list is not very long today. But there are 13 tickers with an entry setup based on my roadmap bounce pattern. Now, before we go to that, before we go through all these, let's just review really quickly. Roadmap line, right? Orange line. If you don't know what it is, I got a video. It's pinned to the homepage. You can just click on my logo underneath me here. Go to the homepage of the channel. Watch that. You know, basically, it's a trend pullback continuation pattern that has a high probability pattern inside it. Once we get through the 618, 61.8% fib line, we set up a 75% likelihood that we are going to go 90% of the way to the 1272. It is 70% likely, 70% likely to get to that 1.272 fib line, 127.2, and getting 90% of the way, 0.9 times 127.2 is 1.1448. So when you see my purple lines, that's the 1.1448. Now, what does this look like? Oh, if we have price coming up like this, we have a retrace like this, we hit the roadmap line, we draw that fib line right there. That's 618. The pink line, we have to have a close above that on whatever time frame we're on. When we get that close above, there's the 75% level, and here's the 70% level. So 75% of the time we get to the purple, 70% of the time get to that 1272. Now here's the crazy thing. That's the high probability pattern right there, between here and here. Right there, that's the high probability. Drops up to 35% to get to the 1618. Now, where's the stop? Stop is $1 below this low, right down here. And as we get through the prior high, you can move the stop up if you wanted to. As we get to the next level, you can move the stop up if you want to. As we get to the next level, you can move the stop up if you want to. But highly likely, as we come up through here, as we come up, a lot of times we see price take a pause here, retrace the breakout, come up to the next one, retrace the breakout once again, and then sometimes we get that extension, but sometimes we break down there and come back to the roadmap line. Or go even lower. Now, interestingly enough, there's another pattern I watch. The reason this close above the 618 is so important, because if we do this pattern, we get the A wave drop, the B wave retrace. Many times, if it's going to continue a new trend down, A, B, C. Now the proportions for this one, typically A equals C. So we go like this. We go A wave down, B wave retrace, C wave down. That would be equality. All right, I took that 3-point fib tool, did that first move, projected it off of the retrace, and got the 100% move. Just graphically, that's this move right here. Copy, paste, right there. Same size move. Now sometimes we get to the 1272 extension right there. So usually my target zone is something like this. We could fall short of the 100%. We could go a little bit more than the 1272. So it's kind of that fat zone right there. Fib lines aren't perfect. Everybody can use them. Some algorithms front run the levels. Some try to push past those levels. They're all coded by humans. Humans do funny stuff. Anyway, so hopefully that helps everybody understand how the patterns kind of come together. This one, I have no high probability to it. It's just one that I watch because that's how the roadmap pattern fails. It's how the roadmap bounce fails. All right. So you can look at it like, even when we get above this level, 25% of the time, we're going to go on down for that C leg. Well, that's not high probability. But if we get below that, there is a potential that we're done. So the only in this, just make this point really quickly. Despite targeting that 100% extension down here, that where A equals C, that's a typical thing. The only requirement for a C is that it goes lower. It just touches a lower price than the A. Somewhere right below the A. That's the only requirement. Does not have to extend. Typically we extend. It's probably like, I'm going to say it's like 70% likely that we get at least to the 100%. I don't have solid numbers on that, but we can, all we have to do 100% of the time to get an ABC like this and have it complete is get a lower low. Now it could be a running flat. There's some exceptions where it can make a higher low and still be a C, but it's truncation and not very typical, and sometimes you can count it a different way and blah 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 blah. Not important. I like to go with the highest probability stuff, the things that occur over and over. So that's why you got to watch out right here. Now let's hunt for some opportunities using those same kind of principles. Right here, I wouldn't touch this SPAC. Maybe pop out to 26 or 29. BREA, it's like another similar thing. Has a reverse split. That's an absolute dumpster fire. Don't mess with that. I wouldn't touch that. Wouldn't touch it. Reverse splits. Danger. Danger, 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 danger. Another one. Reverse split. When this stuff shows up as the biggest movers of the day, it's going to be a rough day. It's typically what happens. History foretells probably going to be a rough day in the market. Resistance right there at the 618. More resistance right here at the downtrend of highs. Be careful. This missed the downside targets. Might see another flush out in MDB. Circle. Be very careful here. Also, this looks like it has a date with destiny of going to the bottom again. FSLR. Potential to pop on up to the target area. Right now we're struggling at that 618 of the bigger pullback. You can see right here, this bigger pullback created this 618 level, and that's where we're grinding right here. We get through up here, we still have the potential to go down in an A, B, C fashion. A, B, C. But if we can get through this high, tips the odds we may be able to push this up here. I would bet on this one, or be thinking about that, even if I was playing the long up into this resistance here. Got to get through that level up around 260, 270 to be able to go up to 360, 370. TTMI. Wow. You see that blasted right up. No pullbacks. Went on a rip. Hit the wall at the 1618. Unusual, but that's, 35% of the time that happens. Kind of ground in here a little bit. Now we're extending. There's a 200% extension right in here. Probably should replace this fib line. I started turning on that 200% because I was seeing stuff fail in between these two fib lines here. It turned out a lot of times it was failing right there at the 200%, which which is basically the size of this move right here, projected right there. All you're doing is looking at this pullback, a recovery, and then adding that full size of the recovery there once again. And stuff, amazingly enough, tends to stall out right there. Baba, cruising, baby. We can get through this bigger 618, 166. Starts opening the door for the bigger recovery and extensions up here to 400 to 500. I don't know if it can do it without a pullback of some sort, but that's the potential. QBTX. This stuff was declining. Now it's starting to move. QBTS must be turning around. It was a decliner. IONQ. Yeah. We open lower and going higher. At resistance up there at 72. MU taking a little pause here. Still shy of the target, 200. That's what I've been expecting. Leveraged Solana. We've talked about that one. That's a leveraged Solana. IONL. Lots of leverage stuff. LEN. Yeah. Back to the roadmap line. If we can hold this, there's the high, here's the low. If we can hold this intact, could extend it again. Came into the vicinity of that gap down 618 and pulled back. That's very classically what we see. Rejecting the first attempt at the gap fill. Well, you could say that was the first attempt, but first attempt after making the low. Rejecting it here. Probably reject the second time at that 1.448, 147 before we can push on through. LEU. Turning green. Wow, look at that. Look at that thing go. Another classic example right there. You see that? Blasted right through. Bounced off the 1618. Back to the 1272. Came up, stalled, back in here again. Now we're going for that 200% extension. Every fib line ladder we climb, every rung higher we go, makes it a little harder to go higher from there. 380, next upside after we get 300. ALAB, 294, TSM, 313 if we're going higher. Watch out for retesting the breakout. SanDisk, 124, 151. DR Horton, probably coming back. It's got a bit further to go to the roadmap line down here. Probably hunting for that. SOLT, 2x leverage on Solana. We could see some big upside here. Solana still has potential to go quite a bit higher. Got this potential to come on up here to the 400 area. Be 58% higher on Solana. So stuff like this. Double that, so we can see 120% higher. Puts it up here around 70. That's a double. Basically. All right, stuff set up for if Netflix continues down the path it's on right now, it will pull back down to that area. Yes, that's what I've said for several months now. If Netflix finishes this pattern, and we're still below that 618, if Netflix finishes this pattern, we should see something below that low right there. Now, going down time frames. Got that high, got that low, came up, rejected off of that 618, and the extension down. Now this move, not an ABC, this is a trending move and should take it down to about 1100 on the proportions. That's a 1, 2, 3, 4, and 5 would get us down to the target. Back to the setups. Setup for today's entry. Turn on some statistics. Turn that off. It's down. So this one's only got one in the history, and that one was right there, and it worked out. Here's the high, here's the low. There's the entry. $6.73 is the target. AMAT. Applied materials. This one has an AB potential, but breaking through the gap down and all of that. Bucking the trend, 208. And this could just be another piece of this B wave, and this B just move over. 208 potential right there. See, I like these ones that can play out and don't change the trend that's intact. Like this B wave just comes over here, and then potential for big downsides. You should get out conservatively before the actual target. KMT. Actually, I don't know what all I've said on this one. Oh, yeah. This puts us above the 618 resistance and can take us on even higher. So this one has a setup right here. A top of trend, bottom of trend. Push up into that resistance. If we can get through. Beautiful. I should tighten this up a little bit. Puts us right at the 618 at 107, 111 at the top of the resistance band. That's the gap down over here. Doesn't have to work, but if we do, tips the odds we may go on higher. But it also can still go lower, so it doesn't change the trend. So book profits if we get to the target. CNXC. Last one worked out. Bunch of stuff firing off. Here's the high. Here's the low. There's the entry. 55 or 65, excuse me. 65 target. There. Next up, CVLT. Last one worked out. Maybe saying how long do these last? Well, average trade lasts 45 candles on average. 205, target right there. Not a big move. Standard deviation is 35 candles. And 490 on that target. Doesn't stop is dollar below the low. On the lower price stuff, that is a big percentage-wise stop. Be careful. 73.82 on that one for Etsy. That actually looks really good. So 45 candles is the average. 35 is one standard deviation. Add 2 more standard deviations to get to the 99%. That's 150 candles. Candle maker's not open on the weekends or holidays. So that leads it to about 210 calendar days on average for the daily chart. Now, if you were on a smaller time frame, same thing plays out. Like 45 candles on average to play out. Stop is still $1 below the low. And 35, so 150 candles on average. But on a minute chart, that's like 3 hours. So the average one of these plays out in 3 hours, but that's just covers 99%. Still leaves the long tail that can take infinitely long. GCBC. Here's the high. There's the low, there's the entry, and 26.58 target. KKR. Here's the high, here's the low, here's the entry, 157.30 is the target. That one has no history of loss. Now, statistical population is more than 30. That is not more than 30. That's half. So if the next 16 are all losers to get you to 30, that would wreck that and take it down to 50% profitable. Right now, with no losers, the profit factor is infinite. So 157.30 if you expect that one to keep the win rate going. That one worked out back there. This one, that's the high, that's the low. There's the entry, 1787. Missile Blast Limited. TDOC. Not a fan of the majority of the price action being under the roadmap line. Not really a uptrend, trend pullback continuation, but statistics don't care about all that. 950. It is a low price ticker. Things under 10 bucks don't tend to work out. Be careful. Actually, it's like under 15 bucks. Most of the big money doesn't trade under 20 bucks, so you don't really have big player momentum helping you out here. As always, be careful. Now, this one still active from back here with a target up around 153. Did not stop out. Set up another entry potential right there. Lower target, 138, can play out inside the bigger potential. And that can still fail on the bigger potential. Could still play out in the bigger potential. So. VRT, last but not least. There you go, up around 158, but didn't hit on this, on TradingView. It hit in Python. In Python and TradingView don't calculate the EMAs the same way. So it did hit in Python, but not in TradingView. So bias for the day. Then we'll wrap this baby up. I will be on Market Masters coming up at 11:30. prosperitypub.com/marketmasters. In case anybody wants to come join it. Yeah, we're already sitting there at the target. So the next one up, 66.72. Very, back test, expand out. In case you're like, I don't see it. Right there it is. Spiked up to the 1272, retested the breakouts, and we're already on the path up to the next level, 66.72. Right there. Same pattern all the time, over and over and over. Just go down to you see it, retested, cruising on up, 66.72. Next level up for resistance. Now, if we get there, we could come back to the roadmap line. So, all time frames, same pattern, all the way down to the 1 minute. Same pullbacks and expansions. So there you go. Hope you have a great day, everybody.